watching News 9, English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and over the next 1 hour, we'll bring you all the top stories from the world of business, economy, and the stock markets from India and across the world. You are watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the headlines that we're tracking for you today. Adani Group denies Wall Street Journal report on LPG imports from Iran, bypassing US sanctions. Japanese brokerage NOMURA sees India's GDP growth slipping to 6.2% in FY26, but stays bullish on stock market. Domestic sectors through OUTSHINE exports. Income tax cut, to boost consumption stocks. Prime Minister Narendra Modi says India's air passengers to double by 2030, presents India as a major aviation hub, seeking investments in the sector at the International Air Transport Association conference. Meanwhile, India's manufacturing PMI drops to 57.6 in the month of May, registering a slight decline from the previous month, but the figure above 50 still suggests growth. Heavy rainfall in many parts of the country brings tears to vegetable shoppers. Onion prices shoot up 20% in just a fortnight. UPI hits new milestone, 33% jump in transactions over the year, and the transaction value touches 25 lakh crore rupees. In a not too surprising turn of events, Meta appoints AI bosses for product teams, product development and upgrades to be approved by artificial intelligence, raising concerns about safety as well as job losses. The big question continues to be unanswered. Will he or won't he? Elon Musk's Make in India plans for Tesla remain dodgy. H.D. Kumaraswamy says Tesla not interested in Indian manufacturing. But staying with the auto sector, Vietnamese low-cost electric vehicle maker VinFast is driving into India, and fast bookings for 2 SUV models to begin as early as this month. Let's start with the top story that we're tracking for you today. US prosecutors are reportedly investigating whether companies linked to Indian industrialist Gautam Adani violated American sanctions by importing Iranian petrochemical products into India through Gujarat's Mundra port. Now, a report published by the Wall Street Journal claimed an investigation is underway to determine if liquefied petroleum gas or LPG shipments brought into India by tankers had originated from Iran, a country currently facing strict US sanctions on its petrochemical exports. Now, the tankers in question reportedly exhibited behaviors experts say are typical of sanction evasion tactics, like switching off tracking systems or using indirect routes. Now, crucially, these tankers are believed to have delivered cargo to Adani Enterprises, the flagship entity of the Adani Group. The US Justice Department is said to be reviewing these shipments and the operations of the vessels involved. But in a firm response, the Adani Group has strongly denied any wrongdoing. The company issued a categorical statement rejecting any involvement in the import of Iranian LPG and asserted that it is unaware of any such investigation. Now, the company, through stock exchange filing, said the Wall Street Journal story on 2nd June 2025 by Ben Foldy and Dave Michaels allegedly links between Adani entity and Iranian LPG is baseless and mischievous. Adani categorically denies any deliberate engagement in sanction evasion or trade involving Iranian origin LPG. Further, we are not aware of any investigation by US authorities on the subject, unquote. The group further added, by policy, the Adani Group does not handle any cargo from Iran at any of our ports. This includes any shipments originating from Iran or any vessels operating under the Iranian flag. Additionally, the Adani Group does not manage or facilitate any ships whose owners are Iranian. Now, this policy is strictly adhered to across all our ports, unquote. Now, the Mundra port, operated by Adani Ports and Special Economic Zone, is one of India's busiest, and any formal probe by US authorities could have serious implications for both business and diplomacy. Japanese brokerage Nomura has projected that India's real GDP growth will moderate to 6.2% in FY26, down from 6.5% in FY25. Now, that's a continued decline from the 9.2% growth seen in FY24, this as per official data. Now, in a new research report released on Monday, Nomura pointed to a divergence between tax collection like GST and other high-frequency indicators such as auto sales and bank credit growth. Now, despite the tempered economic outlook, Nomura remains optimistic on Indian equities. Now, Nomura has revised its Nifty target for March 2026 upwards to 26,140 points from the earlier estimate of under 25,000 points. Now, Nomura said the Indian equity market has been resilient in the recent past despite corporate earnings estimate cuts and global uncertainties. We think positive domestic macros, as reflected in the significant fall in yields and the relatively lower beta on Indian equities underpinned by consistent domestic flows, are supporting market valuations. This as per the report published by Nomura. Now, interestingly, consumption stocks, which have lagged since September 2024's market peak, could see a revival. According to the brokerage, low inflation, falling interest rates and income tax cuts could provide strong support for consumer demand. And moving on now from consumer stocks to aviation. Now, in a bid to boost the Indian aviation sector, Prime Minister Narendra Modi has pitched India as a rising global hub for aviation, telling global leaders that the country's fast-growing aviation sector presents a major investment opportunity. Speaking at the annual general meeting of the International Air Transport Association, or IATA, held in New Delhi, Prime Minister Modi said India is not just a large market, but a key player in the global aviation value chain from design to delivery. He highlighted the new Bharatiya Vayuyan Abhiyan 2024, which replaces the nearly century-old Aircraft Act of 1934. The new law, he said, brings Indian aviation regulatory framework in line with the global best practices, simplifying taxes, compliance and regulations to attract major international investors. Prime Minister Modi also urged global aviation firms to move beyond Make in India and embrace Design in India as India emerges as a critical node in the international supply chain. The Prime Minister also laid out India's vision to become a global MRO hub with a $4 billion maintenance, repair and operations industry by the year 2030. He noted that the number of MRO facilities has grown from 96 in 2014 to 154 today, supported by 100% FDI under the automatic route, rationalized taxes and a sharp reduction in GST for the aviation sector. Now, with India currently seeing 240 million flyers a year, Prime Minister Modi said the number is expected to double to 500 million annually by 2030. And moving on now, India's manufacturing growth has also slowed to a 3-month low in the month of May as demand weakened amid price pressures and geopolitical tensions. But job creation hit a new record high, this according to a survey. According to the HSBC India Manufacturing Purchasing Managers Index compiled by S&P Global, the PMI for the month of May dropped to 57.6, down from 58.2 in the previous month. While that's lower than earlier estimates, it remains well above the 50-point mark that separates growth from contraction, showing continued expansion, though now at a slower pace. However, in terms of job creation, the survey showed that hiring activity hit a record high in the same month of May, while manufacturers increasingly offering permanent positions rather than temporary ones, reflecting long-term confidence. Meanwhile, input costs rose at the fastest rate in 6 months, and manufacturers are passing these on to consumers. output price inflation was among the highest seen in over 11 years, raising concerns for monetary policy makers. All eyes are set on the Reserve Bank of India, which has already cut interest rates twice this year. With inflation still below its 4% target, analysts expect another rate cut on June 6 and possibly one more in the month of August. And let's move on now to inflation and the data coming in just ahead of the Monetary Policy Committee meet, which is starting on the 4th of May and expected to announce the rate decision on the 6th of May. Now, onion prices have jumped nearly 20% in just the last fortnight, with retail rates now touching 40 rupees per kilo in many markets, up from 30 rupees just a few days ago. The sharp spike comes despite reports of higher overall production and improved storage this year. Now, the main reason behind the surge in prices is the heavy rainfall, which has disrupted supply chains and damaged crops. Now, in key producing states like Maharashtra, the rains have disturbed and disrupted transportation and damaged large quantities of harvested onions. Traders say trucks are delayed and consignments are arriving spoiled due to excess moisture. And this is not just onions that we're talking about. Coriander prices have also jumped sharply by as much as 50% in just a week. It's now selling at 30 rupees per bunch, up from 20 rupees. Vendors are warning that if rain continues to batter supply routes, other vegetables could see similar price shocks. Let's move on now to interesting data coming in from India's UPI. Now, in a major boost to India's digital payment, the Unified Payment Interface, or UPI, has hit a new milestone in the month of May, with transactions reaching an all-time high. According to data released by the National Payment Corporation of India, UPI recorded as much as 18.68 billion transactions, amounting to a record 25.14 trillion rupees, which is 25.14 lakh crore rupees in value. Now, that's a 4% jump in volume and a 5% rise in value compared to April's numbers. But look at it on a year-on-year basis. The growth has jumped by 33% in volume and 23% in value. The previous records was set just 2 months earlier in March, but May's surge reflects the continued momentum in digital payments. Daily transactions also rose, climbing from 596 million in April to 602 million in May, with the daily value rising from 79,831 crore rupees to more than 81,100 crore rupees. Now, all the good news is not just coming from UPI seeing strong numbers. The Immediate Payment Service, or IMPS, also saw gains. May recorded 464 million IMPS transactions, up 3% from the month of April, with the transaction value rising to 641 trillion rupees from 6.22 trillion in the previous month. Now, on the other hand, the number of FASTag transactions has also increased by as much as 5% to 404 million in volume during the month under review, versus 383 million in the previous month. The value also zoomed 4% to 7,087 crore rupees compared to 6,801 crore rupees in the month of April. Now, Meta is set to transform how it manages risks for new features and product updates by automating up to 90% of its internal risk assessments using, not surprisingly, artificial intelligence. Now, according to internal documents obtained by NPR, this marks a major shift from Meta's decade-long practice of human-led privacy and integrity reviews, which have been crucial to ensuring user privacy, protecting minors, and preventing the spread of misinformation as well as harmful content. Now, under the new system, product teams will fill out a questionnaire about their project and receive instant AI-generated feedback. The artificial intelligence will either approve the update or list conditions that must be met before launch, with teams self-verifying compliance. Now, Meta says this approach will speed up product development and free up human reviews to focus on more complex issues while automating routine low-task decisions. However, internal sources expressed concerns that AI could now oversee sensitive areas like AI safety, youth protection and violent content moderation, raising fears that reducing human oversight might increase real-world risks. Now, former Meta executive warned that faster launches with less scrutiny could create higher dangers, while some employees feel the vital human perspective on potential risks is being lost. Union Heavy Industries Minister H.D. Kumaraswamy announced that electric vehicle giant Tesla has no plans to manufacture cars in India but aims to open 2 retail stores. While Tesla is opting out of local production, major global EV players like Mercedes-Benz, Volkswagen, Skoda, Hyundai and Kia have expressed keen interest in participating under the Indian government's flagship scheme to promote domestic electric vehicle manufacturing. The scheme, launched in March last year, requires approved manufacturers to invest at least 4,150 crore rupees to produce electric passenger vehicles in India with specific domestic value addition targets. Now, in return, they can import up to 8,000 fully built electric vehicles annually at a reduced custom duty of 15% for a period of 5 years, provided the vehicle meets the minimum import value of $35,000. Now, the program is designed for large manufacturers with annual revenues exceeding 10,000 crore rupees and fixed assets worth at least 3,000 crore rupees. Now, Kumaraswamy emphasized that this initiative aims to position India as a global hub for electric vehicle manufacturing, aligning with the government's Make in India and Atmanirbhar Bharat missions to boost local industry and green mobility. Now, remember, Tesla's CEO Elon Musk had previously faced criticism from US President Donald Trump over the company's expansion plans in India, with Trump labeling it unfair to the United States. Vietnam's largest passenger vehicle maker VinFast is gearing up to launch its VF6 and VF7 electric SUVs in India as early as this month, with bookings opening soon. VinFast's parent company Vingroup is also exploring opportunities in electric buses, green energy and hospitality sectors across various Indian states. Now, these SUVs powered by LFP battery cells will compete in India's growing mid-size electric SUV segment, facing rivals like Tata Nexon, MG ZS EV, Hyundai Creta EV, Mahindra BE6 and Maruti's upcoming e-Vitara. Now, the vehicles will be assembled at CKD or completely knocked down units at VinFast Thoothukudi plant in Tamil Nadu, which will begin operations in the month of July. The plant's initial capacity stands at 50,000 units per year, with plans to scale up to 150,000 units to meet rising demand and explore export potential. Time for a very short break, but coming up on the other side, a mood check on Dalal Street. Remember, Asian markets have opened higher today. Will India's Dalal Street, the Sensex and Nifty follow suit? We will bring you that and also have a very special guest, Kranti Batini, joining us on the other side to decode what your investment strategy should be. You are watching Morning Brief at 9.
मम्मी से नो अंडा इन समर। अंडा तो हर सीजन में सुपर हिट है।
सुपरस्टार है ये, सर्दी हो या गर्मी, संडे हो या मंडे।
वाटरप्रूफिंग
नया बिरला ओपिस
हमेशा वाला लगाना चाहिए था।
नए बिरला ओपिस वाटरप्रूफिंग की क्रैक प्रूफ टेक्नोलॉजी सीलन से बचाती है।
हमेशा वाला लगाना चाहिए था।
बिरला ओपिस 14 साल तक की वाटरप्रूफिंग वारंटी देता है।
हमेशा वाला लगाना था।
इनको जमाने से पीछे चलने दो, आप चुनो नया बिरला ओपिस।
to be successful in chess, it's about 99% tactic and 1% strategy.
My skills are high enough in chess that even if I make a couple of bad moves, I might still get away with it.
But you come across as a typical good boy that every mother would like to have.
Watch Radico Presents Duologue with Parun Das at these times on News 9.
Is this politics of appeasement?
That is the ground reality.
The violence continued unabated for the next 24 hours. Why is there Mamta for Pahalgam but not for Murshidabad? Everyone in Pakistan is saying that India has punished us. We are all agreeing that Operation Sindoor is a success. तो प्रॉब्लम क्या है? किसका नमाज़े जनाजा निकल रहा था बहावलपुर में और रावलपिंडी में?
Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Back, you're watching Morning Brief at night. Let's bring you the mood check on markets, not just in India but in Asia. Remember, Asia has closed higher today, and this comes on news of talks of easing trade tensions between US and China, where US is saying that the restrictions that it had posed on Chinese solar panels being imported into the US could now be eased. China, on the other hand, not very happy with what US is saying on its AI chips control. But meanwhile, with this momentum that we are seeing in easing trade tensions, Asian markets are higher in trade today. Look at Hang Seng. Hang Seng is up more than 1%, whereas the Shanghai Composite Index is up about 0.5 percentage point. We are also seeing good gains on Taiwan's TAIEX, which is up almost 0.9 percentage point. But Nikkei, Japan's main stock index, the Nikkei 225, is more or less flat with gains of just about 15 basis points or so in early trade today. Remember, we don't have Kospi on this chart today because the South Korean stock market is closed given the snap presidential election scheduled today. So that's the mood on Asian markets. Let's switch over to Indian markets and see if India is able to hold momentum today or not. And not surprisingly, the Sensex and Nifty are not really in line with what we are seeing on their Asian peers indices, and this could be coming largely by way of the massive hit that we are seeing in Adani's ports and special economic zone stocks today, which have taken a beating. And this beating comes, of course, by way of the Wall Street Journal report, which we cited earlier on the show, that is suggesting that perhaps Iranian oil was imported by Adani Enterprises. Let's look at the Nifty 50 heat map and try and make sense of which are the other stocks which are in stress this morning. Like we told you, Adani Ports is now down about 2.6% or so on the index, and this is not great news. Even other Adani Group companies in the distribution sector is down about 2.5% or so. So the heavyweight Adani Group is one which is seeing major losses in trade this morning. Beyond that, we are also seeing a little bit of pressure on the banking side. ICICI Bank and Axis Bank are both down in trade this morning. Hindustan Unilever, for some reason, is also down about 0.6%. More or less all other sectors are flat. IT is seeing minor gains. Energy stocks are sitting on little better gains. But beyond that, the banking sector seems to be a little bit in stress this morning. But the major losses really coming in on Adani Group stocks this morning. And this by way of the report that we just spoke about. Well, let's understand this a little better. Kranti Bathini, equity strategist at Wealth Mill Security, joins me this morning. Kranti, good morning. Thank you for being here with us on News 9. I want to understand this new report which has now surfaced. Adani Group has denied the allegations of any wrongdoing on importing Iranian LPG on its Mundra ports. But the stock market is not really very, very buoyant this time around on the statement coming in from Adani Group. In fact, Adani stocks are down in trade today. Adani Ports down as much as more than 2% now.
Yeah, Karthik. Yeah, the negative news has been creating some kind of selling pressure on Adani Group companies, especially like company like Ports, Adani Ports is concerned. But Karthik, Adani group stocks are pursued as high beta stocks. They are much more vulnerable to these kind of allegations and news that do surfaces here and there. So nothing new for these group companies. Something the other bothers them. These kind in the kind of way. Earlier we used to get the sanctions or some kind of judgments or news of U.S. courts. So that also hampered the stock sentiment earlier, but nobody discusses what's going on with respect to those cases. So these kind of news do surprise us on Adani Group shares, but they tend to disappear after some time.
All right, you're right, they do tend to disappear after some time, but if an investigation was to be launched into the Adani Group, are we likely to see the kind of losses that that investors in Adani stocks saw after the release of the Hindenburg research report, or do you think the reaction this time could be a little muted?
Karthik, earlier the stocks were in a momentum zone. By and large, Adani Group shares used to trade at a very astronomical valuations. But post Hindenburg report, the stocks have been in a long consolidation phase. So I don't think so there will be any kind of a correction in these stocks immediately. We need to wait and watch how things are going to evolve over a period of time. By and large, the stocks have been in a consolidation phase at this point of time. In terms of the financial performance are concerned, these group companies have been posting good set of numbers. They're improving their cash flows at this point of time. And the infrastructure projects where they're focusing, they have been doing extremely well, creating value for the group and for the shareholders internally at this point of time. But in terms of the stock performances are concerned, the stocks have been in a consolidation phase at this point of time. So investors with high risk appetite, one can accumulate these stocks for a very long term, and the existing investors, if they have high risk appetite, they can hold. But if they are holding Adani Group shares, they have to get ready to habituate these kind of movements and these kind of news flows.
All right, so get habituated to volatility in Adani stocks. Well, let's move on, Kranti, now to the overall broader feel in the stock markets today. Sensex and Nifty both defying what we've seen in Asian markets. In fact, both indices are down. Is this again largely coming by way of what we are seeing on Adani Group stocks, and two of them, Adani Enterprises, Adani Ports, which are both heavyweights on the Nifty 50. But I'm also seeing some pressure on banking stocks. ICICI Bank, for example, is down about almost 0.9% or so in trade this morning. Bajaj Finance is also down about 0.8%. Or so. What's the pressure really for the banking sector? Is the pressure coming from rate cut expectations, higher than expected rate cuts, lower than expected rate cuts? What is really driving the sentiment on banking stocks today?
Karthik, there is a consensus view in the market that there will be imminent 25 basis point rate cut. Anything above 25 basis point rate cut is definitely a surprising to the market, and it's a bonus to the market at this point of time. These stocks have been showing resilience, and foreign portfolio investors have been the net sellers in the last couple of days trade. So some kind of aberrations are coming with respect to the foreign portfolio selling is concerned. But by and large, one can pull on to these names. And with respect to the long-only foreign portfolio investors are concerned, but then one of the favorite sector in India is banking and financial services. It offers a strong franchisee, and banking and financial services are pursued as the center of growth for any economy. They're like the proxies for the growth of any economy. So at this point of time, in these valuations, banking and financial services, both public as well as private sector, looks very attractive for a longer term basis, given the kind of the rate cut cycle where the entire globe is waiting, either maintaining, the central bankers have been maintaining the status quo or trying to tight the liquidity. At this point of time in India, we are in a much favorable condition. We have inflation has been cooling off. We are expecting a good monsoon. and there is a consensus. We have a strong, very tight monetary policy. So at this point of time, to support the growth, if the rate cut cycle continues, the first and foremost beneficiaries are banking and financial services.
All right, and let's also talk about IT sector. We do that quite often on this show, Kranti, and especially on days that you're around. Now, again, I'm seeing absolutely no momentum in IT stocks in trade today, despite the fact that there has been talks about easing tensions between China and the US when it comes to trade, and the fact that the indices in the US touched almost a record high yesterday. Despite that, we aren't really seeing too much of a rub-on effect on India's IT stocks today. Why are we seeing this sort of divergence between what is happening in the US and especially on the NASDAQ to how the Indian IT stocks are responding?
Yeah, Karthik, you're absolutely correct. The correlation has been slowly derailing, slowly moving at a very lag effect. So until unless we get a greater clarity with respect to the US growth and increasing the budgets of the companies, Indian IT companies are going to be bound in some kind of a consolidation phase that can be longer than what we are expecting. But given the facts and the strong business models Indian IT companies they enjoy in terms of the service industries are concerned, definitely investors with longer term horizon, at least if the investors have a 2-3 years kind of a long term horizon, one can start adding IT companies. Otherwise, medium to short term, these kind of a consolidation and rub-off effects are going to be there for Indian IT companies.
All right, so that's the view coming in on the IT pack. Let's move on now, Kranti, should be to the much talked about and long awaited National Stock Exchange IPO, and that has been grabbing investor attention recently, boosted by a sharp rally in the unlisted market and growing buzz around the upcoming IPO on the capital market. Now, remember, the surge follows remarks from SEBI chief Tuhin Kanta Pandey as NSE works to secure a crucial NOC from the regulator to move forward with its highly anticipated public offering. Now, over the past almost 15 days or so, NSE stock price has surged nearly 60% and climbing from 1,500 rupees to about 2,400 rupees per share with a share capital of 24.5 crore shares. This places NSE's market value at about 6 lakh crore rupees or so. What's the buzz, Kranti, really? Why is it that we are seeing that this IPO and the NOC has been awaited, not coming through? And why is there so much buzz on the grey market before this IPO hits the capital markets?
Karthik, you are absolutely correct. There is a lot of euphoria with respect to National Stock Exchange stock is concerned. And you rightly mentioned, the last 10 days, the stock price moved from 1,500 to 2,400 in the unlisted space. But unlisted space, the price discovery is not exactly the right way to put the things. The supply can be limited. There can be various reasons with respect to the price discovery of the unlisted space is concerned, Karthik. But going ahead, if they can get the early clearance and approval from the SEBI, it is going to be one of the largest IPO in India. And also, given the kind of a strong business model as a market infrastructure institution in India, and also one of the largest exchange, the modern exchange in India, with a strong cash flows, NIC can be one of the key favorite for the foreign portfolio investors. And given the kind of the growing equity cult in India, NSE or market infrastructure companies are expected to do well. And NSE is one of its holding companies. I can say it can be the NSE have a stake that is NSDL that also coming for IPO. So it adds kind of a value unlocking for NSE.
Right.
Given the kind of the current activity at this point of time, and also the nearing the feelers that the market got with respect to NSE IPO, we are witnessing a heightened activity in the unlisted space.
You're right, Kranti. In fact, if you look at the numbers, and the numbers are quite telling. You're talking about unlocking value. Imagine the amount of unlocking which will happen if NSE proceeds to dilute just 10% of its equity in the IPO. It stands to raise an estimated 55,000 to 60,000 crore rupees in the primary market. Now, this would make it the largest IPO in India's stock market history, surpassing the previous record set by Hyundai Motor India, which raised close to 28,870 crore rupees. So massive value unlocking on the horizon if and when that NOC comes through from SEBI and NSE goes ahead and lists itself on the public markets. Now, Kranti, let's move on now to the mood on foreign investors. And foreign investors are also starting to head back to Indian stocks. Now, this is marking a hopeful turn, one could call it, after a major period of withdrawal in the month of May alone. Now, look at the data again. Overseas investors participated in a $5.5 billion worth of large block trades, the highest monthly total in almost a year. And there's been a dramatic jump from just about 220 million in the month of April. Now, according to bankers, these block trades were well received by foreign buyers, and often these also signify a potential recovery in the IPO market. So, Kranti, what do you make of this surge which we are seeing? And of course, there's also been a support rally that we've seen in the Nifty 50 index, which has risen about 6% or so since the month of April. So, what do you make of this new data which is coming in of FIIs purchasing around $3 billion worth of Indian stocks combined in the month of April and May?
Absolutely, Karthik. As the narrative changes, Indian markets are one of the most favored market across the globe. The hot money in the medium to short term, they tend to get into markets like China in the medium to short term, but the long only money is concerned is coming back to India because of the strong growth outlook and the earnings prospects are concerned. There is a comparison that's what's going on with the valuations of Chinese market versus Indian markets. Of course, on a long-term basis, the long-term averages of Chinese markets looks attractive for some kind of foreign portfolio investors. But for the longer-term basis are concerned, India looks very attractive. This is where the policy continuity and also there is greater transparency that's available for the foreign portfolio investors. So there is a trade-off is going on. So some kind of a strong allocation is taking part on Indian markets also at this point of time. So that's the reason foreign portfolio investors there is a reignited buying interest that's coming back to Indian markets.
Right. Okay. So that's the view coming in. Kranti Patini, always a pleasure having you right here with us on News 9. We will, of course, keep tracking what's happening on the Adani story as well as the NSE IPO and all other major market movements. But with that, we will now slip into a very short break right here on Morning Brief at 9. When we come back on the other side, we'll bring you all the global business and economy stories that we're tracking for you today. You are watching Morning Brief at 9.
A deep dive into what matters to you the most. Angles you won't find anywhere else. News that impacts your life.
Welcome back. You're watching News 9. Let's bring you all the global stories that we're tracking for you, and let's begin with the United States. Now, well, steel and aluminium prices surged across the U.S. on Monday after President Donald Trump announced that he would double tariffs on imports of the two metals, pushing it from 25% to 50% in terms of tariffs. Now, meanwhile, foreign steel makers took a hit on the markets, with shares dropping sharply. More details in the next report.
U.S. steel and aluminum prices soared on Monday after President Donald Trump said he would double tariffs on the two metals to 50%, intensifying the global trade war. Trump's announcement came late Friday, just hours after he accused China of violating an agreement to mutually roll back tariffs and trade restrictions for critical minerals. The new steel and aluminum tariffs are set to take effect on June 4th. Traders reacted Monday by sending aluminum prices skyrocketing 54%, while U.S. hot-rolled coil steel climbed about 7.5%. Meanwhile, the tariff shift was applauded by U.S. producers of aluminum, who saw their shares spike on the hope that duties would stop a flood of imports. Shares of steel manufacturer Cleveland-Cliffs surged as much as 24%, while Steel Dynamics and Nucor each climbed more than 10%. On the flip side, shares of Asian and European steel firms slumped, with Salzgitter, Germany's second biggest steelmaker, warning that Trump's tariff policy would deal a severe blow to the European industry. The U.S. is the world's largest steel importer, excluding the European Union, with more than 26 million tons of steel imported in 2024, according to the Department of Commerce. While some industry experts questioned whether the tariffs would be implemented as stated in light of Trump's previous reversals, they said uncertainty and climbing prices of the metals would dampen industrial activity.
And it's that industrial activity that small American businesses are feeling the squeeze on from President Trump's new metal tariffs, which are increasingly turning to foreign trade zone warehouses to delay paying import duties. Now, here's how some companies are adapting to the new so-called world order.
At this massive warehouse in Chandler, Arizona, goods that face steep U.S. tariffs are stacked high in what is known as a foreign trade zone, or FTZ. It's a federally designated area that allows American businesses to defer import duties.
We import quite a few items from China, and we've been hit of late with terrible tariffs. So the foreign trade zone gives us an opportunity to defer those tariffs.
Terry Gooden is the CEO of Sportiflex, a manufacturer of sports fences, which he says has been hit hard by U.S. tariffs on aluminum and steel. Now he worries that without relief from President Donald Trump's tariffs, his already small employee count could be cut significantly.
I just know that we have 9 people, and if we don't get some relief soon of these tariffs, we're going to have 3 people.
FTZs are not new. They were developed back in 1934 and are located within a 60-mile radius of a U.S. port of entry. David Harlow, president of ITC Diligence International, says there has been a renewed interest in FTZs as businesses look for ways to navigate current trade tensions.
We've seen probably about 100% increase or more in companies wanting to learn and understand how they can mitigate and navigate tariffs and utilizing the foreign trade zone to do that.
James Peacock, CEO of SKU Distribution, the FTZ warehouse storing Gooden's products, says he has also seen a spike in interest from a warehouse owner standpoint.
We went from maybe a couple of calls a month to 10 calls every day. And then we had probably 3 or 4 submissions online asking about the foreign trade zone and was it available? Can we get some more information on it? Can you explain to us what this is?
For Gooden, the FTZ is an opportunity to buy time and conserve money.
Politically, I'm conservative. I did vote for President Trump. I don't agree with the way he's handled the tariffs. I feel like American business people are being punished. What we were hearing from President Trump was he's collecting hundreds of billions of dollars and inferring that it's coming from the Chinese. It's not. American businesses are paying these tariffs.
Meanwhile, Wall Street closed higher on Monday, showing resilience even as President Donald Trump escalated trade tension by doubling tariffs on imported metals. Now, here's what's driving the investor optimism on Wall Street.
U.S. stocks closed higher on Monday, with the Dow just nudging into the green, the S&P 500 rising 0.4%, and the Nasdaq adding 0.2%. Investors by the end of the session shrugged off President Donald Trump's latest salvo to double tariffs on imported steel and aluminum to 50%. But Sam Stovall, chief investment strategist at CFRA Research, thinks that despite months of flip-flopping on trade policy, Trump this time should be taken at his word.
I think the 50% tariff placed on steel and aluminum is not just rhetoric, it's reality. It is something that is going to last, possibly through the entire Trump administration. Our Washington analysis political strategy arm believes that the administration is trying to do is to drive new capacity within the U.S. for both steel and aluminum production, rather than simply trying to use this as a negotiating ploy.
Shares of U.S. steel companies rose, led by Cleveland-Cliffs, which surged 23%. Other steelmakers also gained, including Nucor and Steel Dynamics. But shares of automakers dropped, with Ford closing down almost 4% and General Motors also falling by a similar percentage. The Nasdaq got a boost from shares of Nvidia as well as shares of Meta, which gained more than 3.5%. And shares of Tesla lost ground after the EV maker reported lower monthly sales for Portugal, Denmark, and Sweden.
Okay, so US President Donald Trump and China's President Xi Jinping are expected to hold a long-awaited phone call later this week. This according to the White House. This comes as trade tensions flare again when Trump recently accused China of backtracking on a temporary tariff truce. White House Press Secretary Caroline Leavitt confirmed the possible call on Monday. Now, Trump and Xi Jinping have yet to have any confirmed contact more than 5 months since the Republican leader returned to power, despite frequent claims by the US president that a call is imminent. Now, Trump even said in a Time magazine interview in April that Xi had called him, but Beijing insisted that there had been no call recently. Staying with US politics, US President Donald Trump said on Monday that no future nuclear deal with Iran will allow the West Asian country to enrich uranium. In a post on Truth Social, Trump responded to media reports that Washington's negotiators might allow limited enrichment for Tehran. Trump declared, and I quote, "We will not allow any enrichment of uranium," unquote. Trump also placed blame on former US President Joe Biden for allowing Iran to progress this far in its nuclear ambitions. Meanwhile, Iran has maintained it has nothing to hide as far as nuclear enrichment is concerned. A sixth round of nuclear talks between Washington and Tehran is scheduled to take place next week. Okay, so Disney is laying off several hundred staff across its global film, TV and corporate divisions. The cuts follow an earlier round in March, part of efforts to reduce spending and restructuring in the face of shifting entertainment landscape. Impacted departments include marketing, publicity and casting. Disney has already eliminated 7,000 jobs last year to save as much as $5.5 billion. The most recent earnings exceeded expectations, boosted by Disney Plus and theme park performance. Let's move on now to the conflict in Europe. Russia and Ukraine agreed on Monday to exchange more prisoners of war and repatriate 12,000 fallen soldiers after peace talks in Istanbul on Monday. But there was no breakthrough on a proposed ceasefire, which Ukraine, its European allies and the US have urged Russia to accept. Remember, the second such peace talks between the warring sides comes hours after Ukraine launched its most ambitious drone attack inside Russian territory. Details on the Istanbul talks are up next.
Hoş geldiniz diyorum. Russia and Ukraine agreed to exchange more prisoners of war and return the bodies of 12,000 soldiers after peace talks in Istanbul on Monday. The warring sides met for barely an hour for only the second such round of negotiations since March 2022. But there was no breakthrough on a proposed ceasefire, which Ukraine, its European allies, and the US have urged Russia to accept. Russia says it wants a long-term settlement rather than a pause in the war. Ukraine says Russia does not want peace and that new sanctions are needed to force it to pursue a ceasefire. Following Monday's talks, Kremlin aide Vladimir Medinsky said Russian negotiators had handed their Ukrainian counterparts a detailed memorandum outlining Moscow's terms for a full ceasefire, and also suggested a short ceasefire to collect the bodies of dead soldiers. According to Russian media, Moscow said it would only agree to end the war if Ukraine gives up big new chunks of territory and accepts limits on the size of its army. Ukraine has repeatedly rejected the Russian conditions as tantamount to surrender. Later, Ukraine's defense minister Rustem Umerov provided some details on the negotiations.
Only during the discussion today, Russians handed over its document to our delegation. Our teams will take a week to review the documents, and then we can coordinate further steps. On release of prisoners of war, we agreed to focus on specific categories rather than numbers. We agreed to exchange all for all, seriously wounded and seriously sick prisoners of war. Second category is young soldiers who are from 18 to 25 years old, all for all. Also, we agreed to return 6,000 to 6,000 bodies of fallen soldiers. Children. We have provided the other side with a list of several hundred Ukrainian children who were deported to Russia.
Umerov said Ukraine also proposed more talks before the end of June, believing only a direct meeting between Ukrainian President Volodymyr Zelensky and Russia's Vladimir Putin can resolve the outstanding issues. Turkish President Tayyip Erdogan hailed Monday's talks as a great meeting, and he expressed hope to bring together Putin and Zelensky for talks in Turkey that could also include US President Donald Trump. Both Ukraine and Russia, for different reasons, are keen to keep Trump engaged in the peace process. Trump has said the United States is ready to walk away from its mediation efforts, unless the two sides demonstrate progress towards a deal.
Meanwhile, British Prime Minister Keir Starmer is accelerating efforts to rebuild the UK's defence capabilities after US President Donald Trump warned European allies to take more responsibility for their own security. Take a look.
Britain will expand its nuclear-powered attack submarine fleet as part of a defence review. The review is designed to prepare the country to fight a modern war and counter the threat from Russia. Prime Minister Keir Starmer, like other European leaders, is racing to rebuild the UK's military capabilities. That's after Donald Trump told the continent it needed to take more responsibility for its own security.
We are investing £15 billion in our sovereign warhead programme to secure our deterrent for decades to come, creating 9,000 jobs and thousands more in supply chains across the country.
Monday's strategic defence review is to call for Britain's armed forces to move to a state of warfighting readiness and reverse its post-Cold War military decline. Starmer was speaking to workers at a BAE Systems shipbuilding site in Scotland.
When we are being directly threatened by states with advanced military forces, the most effective way to deter them is to be ready. And frankly, to show them that we're ready. To deliver peace through strength.
Despite cuts to the military budget in recent years, Britain still ranks alongside France as one of Europe's leading military powers. Its army helps to protect NATO's eastern flank, and its navy maintains a presence in the Indo-Pacific. But the army, with over 70,000 full-time trained soldiers, is the smallest since the Napoleonic era. Starmer has sought to cast the higher defence spending as a way to create jobs and wealth, as he juggles severely strained public finances and a slow-growing economy. The report, to be accepted by government, contains 62 recommendations. The announcement on new submarines helped lift the share prices of defence groups Babcock, BAE and Rolls-Royce.
And with that, it's a wrap on this show. Thank you so much for watching. But remember, news continues right here on News 9. So stay tuned. More coming up on the other side of the break.
He plainly tried to internationalize the Kashmir issue.
We know as a matter of fact that it was Pakistan that ran to America.
West seems to disregard anything that doesn't affect it directly.
Donald Trump is trying to tell the world that I am the savior. He has no business of speaking about Kashmir. There's a Russian reality, there's an American reality, but I suppose there is also an Indian reality.
Pakistan will test you time and again on this particular issue. We have actually struck harder, wider and deeper.
The escalation happened, so be it.
India must not make the same mistake again.